Hello and good afternoon, and thank you ahead of time for watching this video and clicking on this. Maybe it's a subject that is near and dear to you because of the title, but I just picked it out of this random book, and today's subject is, well, I just picked it out randomly from this book, I should say. Today's subject is the difference between direct bill, financed, and installments. Now, a lot of these things that I'm telling you are not a end all conversation. In other words, you can't just hear this one video and then just be an expert on it. But what you can is hear this one video and know what things to look up on Google or whatever search engine you use, or to ask your agent. If you're giving me the opportunity to quote you, these are things that I'll go over with you about how to pay your payments. So direct bill, financing options, and installment plans. Those are the three things that I'd like to talk to you about briefly. So direct bill is just what it is. Most people are really familiar with direct bill if they had any experience with their personal insurance policies. Because although you might buy your personal insurance policy from an agent or even online, a lot of times you're dealing directly with that insurance company. So Allstate, Geico, USAA, the list goes on and on. That's pretty much all direct bill. You are paying an insurance company and you're making changes with that insurance company directly. However, with an insurance for commercial trucking, direct bill outside of Progressive can be quite exclusive. In other words, Progressive is almost all direct bill, if not all direct bill. But that shouldn't be your only option for insurance. You should actually be looking for as many options as you qualify for. And very few of those options will give a new venture direct bill. So if you're not a new venture, I commend you for making it as far as you did. And make sure that when you start getting quotes at the renewal time, that you're asking for direct bill options where available. I'll get into that because it is my favorite type of insurance to sell, and most all my clients get the direct bill option where available. So if not, there's two other options outside of direct bill that are more prominent in the industry outside of Progressive. Again, I keep referring to that because I'm not just a Progressive agent. Northland, Canal, the list goes on of insurance companies that will give you a quote. So the other two options are financing and installment plans. So an installment plan is where there's no finance charge. You pay your insurance agent directly most times, and then I turn around and submit that money to the insurance carrier. So, it is adds an extra layer, but it removes the finance charge. And that again is not as prominent as financing options. Financing options are where an insurance agent will give you a quote, but that quote needs to be paid in full. The insurance companies need their money in full in a lot of cases. So what a finance company will do is say, we'll let you pay your agent the down payment, and then we will send the rest of the money to the insurance company and you will pay us. So you will be paying the finance company your monthly payments. I think I can get into a little bit about the differences right now because you're taking the time to watch this, and I really appreciate you wanting to learn. Love for you to subscribe to my channel to catch more of these videos. I'm trying to do 1 to 3 videos per week, and hit the notification button to get notified when I do this, but definitely like and comment on the video to let me know you were around. So the financing means that the money's paid in full. I'm going to give you a couple hypotheticals because you are trying to learn. Let's say you are one truck, David's Trucking Company, and you add a second truck. If you add that second truck, you're most likely going to have to pay a down payment again for that insurance agent, and then the rest of the money will be financed and sent to the insurance company as paid in full. What are the drawbacks to that? Well, let's say the new truck that you brought on decides to leave and go somewhere else, or needs to be removed from your policy for whatever reason. Long story short, you may end up paying the finance bill for 2 trucks for 1 to 2 payments after that truck is gone. Doesn't mean that that's money just poof and gone. It does mean that until the billing gets settled out, you'll have to pay for both. There's so much to this that maybe I can go into financing a policy at length in the future. But that extra money that you're paying while that vehicle is not even there for you anymore will get applied to your future payments. So if you're paying for 2 trucks for maybe 2 months after it's gone, and then it's gone, then that extra money will be applied to your future payments, meaning you may not even have a payment for the following 2 months because you paid extra. That could be very frustrating and honestly a business killer if you don't have the funds to cover that. And definitely the down payment, that's another factor. That's why I really want to get into these differences later in another video. But that down payment that the trucker might have given David's Trucking Company to lease on, that down payment does not get returned until the policy ends or until the financing is satisfied. Once the financing is done, then they will return any remaining funds, which is probably that down payment if he was there one day and gone the next. A lot of different scenarios to talk about, so that's why I might go into that in a different video. The installments is as close to direct bill as you can get. In other words, if David's Trucking Company brings on a new truck, most likely we'll have to pay a down payment. But if he leaves the very next day, he should get all that money back pretty fast, and that David's Trucking Company will not have to pay for 2 months or a month of extra insurance. Basically, billing is changed immediately on an installment plan. The same goes for direct bill. The difference and the most beneficial difference between direct bill and installment plans is direct bill typically does not charge a down payment when bringing on a new piece of equipment. They're going to just adjust the monthly payments accordingly. Oftentimes, an installment plan can be set up to where there's no down payment needed and the monthly payments are just adjusted. But that is a little bit rare, and the insurance agent has to really know what they're doing in order to set up the policy as an installment plan that does not require a down payment. So the 3, to recap, is direct bill, installment plan, and financing. So make sure that when you're getting your quotes from your insurance agents or you're with me, that you're learning about these differences, learning what you qualify for. You really want to go for direct bill as often as possible because it frees up, I don't want it to sound like freeze, but it releases the money as quickly as possible where it's not tied up into different places, and I'll get into that in other videos. But direct bill would be your number 1 choice. Installment plan would probably be your 2nd choice, and financing would be your 3rd choice. I hope this helps and gives you value while you're learning about the trucking industry. If you're an insurance agent learning about this through my videos, I commend you for seeking out this knowledge. You will probably go a long way in the industry. I started in 2007 and learned from so many different people, clients, agents. I learned from everyone. So take the time to hit thumbs up, and I'll see you on the next one. Bye-bye.